Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're discussing the recent report from the Toronto Regional Real Estate Board, which highlights a significant drop in home sales in the Greater Toronto Area. In February, home sales fell by more than one quarter compared to the same month last year, even though buyers still hold substantial negotiating power. The board reported that 4,037 homes were sold last month, marking a 27.4% decrease from the 5,562 homes sold in February 2024. Furthermore, sales were down 28.5% from January when adjusted for seasonal variations. The average selling price in the region also saw a decline, dropping 2.2% from a year earlier to $1,084,547. The composite benchmark price, which is designed to represent a typical home, decreased by 1.8% year over year. Interestingly, the number of newly listed properties in the Greater Toronto Area increased by 5.4% compared to last year, with total inventory soaring by 76% to 19,536 properties. This surge in listings provides buyers with a wealth of options and considerable negotiating leverage. The Toronto Regional Real Estate Board anticipates that a decline in borrowing costs in the coming months could improve affordability for prospective buyers. However, many buyers are currently hesitant due to the high monthly payments associated with a typical property. Jason Mercer, the board's chief market analyst, noted that broader macroeconomic factors, such as the strained trade relationship between Canada and the United States, are causing potential buyers to adopt a wait-and-see approach when it comes to purchasing a home. Let's take a closer look at the real estate market in the Greater Toronto Area as we begin to understand the dynamics at play in February 2025. According to the latest report from the Toronto Regional Real Estate Board, the landscape for homebuyers is marked by high listing inventory, which provides a significant advantage in terms of choice and negotiating power. Despite a drop in home sales compared to the same period last year, the abundance of available properties offers buyers considerable leverage. In February 2025, the Greater Toronto Area saw 4,037 home sales through the multiple listing service system, down by 27.4% compared to February 2024. Meanwhile, new listings increased by 5.4% year over year, amounting to 12,066. This surge in listings has created a more favorable environment for buyers who are in the market, offering them a wider range of options. The average selling price in the region has also experienced a decline, dropping 2.2% from the previous year to $1,084,547. Similarly, the MLS Home Price Index Composite benchmark was down by 1.8% year over year. Even on a seasonally adjusted basis, both the composite benchmark and the average selling price showed a downward trend compared to January 2025. Toronto Regional Real Estate Board President Alekia Berry-Spruill has pointed out that many households are eager to purchase a home but are finding it challenging due to current mortgage rates, which make it hard for the average household to comfortably afford monthly payments. However, the board remains hopeful that a decline in borrowing costs in the coming months will improve affordability. Jason Mercer, the board's chief market analyst, highlighted that beyond affordability concerns, there is a growing sense of economic uncertainty among home buyers. The strained trade relationship with the United States has likely contributed to this hesitation, prompting many to adopt a wait-and-see approach. Mercer suggests that if trade uncertainty eases and borrowing costs continue to trend lower, there could be a noticeable uptick in home sales activity in the latter half of the year. Furthermore, with recent political changes, such as the Ontario provincial election and the ongoing developments at the federal level, there is a lot to consider from a policy standpoint. John DiMichele, The chief executive officer of the Toronto Regional Real Estate Board emphasized the need for clear policy direction regarding housing supply, affordability, trade, and the economy to boost consumer confidence. As many homeowners approach the end of their mortgage terms, the question of how to save money during the renewal process becomes increasingly relevant. Ontario real estate broker Lindsay Smith shared some valuable insights on ways homeowners can navigate this financial milestone effectively. Smith emphasizes the importance of shopping around for the best mortgage rates and terms. While it may be tempting to simply renew with your current lender for convenience, Smith advises homeowners to explore their options. By comparing offers from different lenders, borrowers may find more competitive rates or terms that better suit their financial goals. Another strategy Smith recommends is negotiating with your current lender. If you've been a reliable borrower, you may have some leverage to negotiate better terms. Lenders are often willing to offer incentives to retain clients, so it's worth having a conversation before committing to a renewal. Smith also highlights the potential benefits of making additional payments or increasing the frequency of payments before the renewal date. This approach can reduce the principal amount owing, ultimately lowering the interest paid over the life of the mortgage. Even small adjustments can lead to substantial savings in the long run. Furthermore, Smith suggests that homeowners take the time to reassess their financial situation and long-term goals. This is an opportune moment to consider whether a fixed or variable rate mortgage aligns better with your current circumstances and future plans. Each option has its pros and cons, so it's essential to weigh them carefully. Finally, Smith underscores the value of consulting with a mortgage broker. Brokers can provide expert advice and access to a broader range of mortgage products that might not be available directly to consumers. Their expertise can be especially beneficial in identifying options that align with your financial objectives. TD Bank has reported flat growth in its residential mortgage portfolio for the first quarter of 2025, attributing part of this stagnation to seasonal factors. The bank's mortgage portfolio saw a slight increase to $270.9 billion from $270.5 billion in the fourth quarter of 2024. Meanwhile, its home equity line of credit portfolio grew to $124.2 billion, up from $123 billion in the previous quarter. Despite these modest figures, TD remains optimistic about future growth, largely due to strategic changes expected to enhance performance in the coming quarters. Sona Mehta, TD's head of Canadian personal banking, expressed confidence during an earnings call, noting, "This is a business that we like, that we want to grow, and we're continuing to compete to win profitable business." Mehta emphasized that TD's multi-channel lending strategy gives the bank significant market reach. A key factor in TD's strategy is its focus on proprietary channels. Over recent quarters, TD has intensified efforts to strengthen its market approach, particularly through these channels. Mehta highlighted the introduction of new roles, such as Resolute specialists and investing specialists, in branches with high potential. This integration between branch and mortgage sales forces has led to promising results, with referrals from branches to mortgage sales teams tripling quarter over quarter and resulting in $1 billion in funded volumes. This has been the best first quarter on record for TD's mobile mortgage specialist team, according to Mehta. Looking ahead, TD's mortgage portfolio is set to face a wave of renewals, with $110.6 billion in fiscal year 2026 and $111.9 billion in fiscal year 2027. By 2027, about three-quarters of TD's total amortizing mortgage portfolio will be up for renewal. Many borrowers who locked in 5-year fixed rates during the pandemic will likely encounter payment increases as they renew in a higher rate environment. Meanwhile, TD reported a normalization in the average remaining amortization periods across its mortgage portfolio. As a major Canadian bank offering fixed-payment variable rate mortgages, TD has observed ongoing declines in amortization periods following Bank of Canada rate cuts. Notably, only 8.7% of its portfolio now has an amortization period of 35 years or more, a significant decrease from the 27.4% peak in the first quarter of 2023. In terms of financial performance, TD's first quarter net income adjusted was $3.2 billion, up 8% year over year. Earnings per share stood at $1.97. The bank's uninsured mortgage portfolio increased slightly to 84%, with an average loan-to-value ratio of 53%. Though the percentage of mortgages renewing in the next 12 months remains high at 59%, TD's fundamentals appear strong, with Meta stating confidence in the bank's ability to compete and win profitable business. Today, we're delving into a significant announcement from the federal government regarding their investment in housing within Ottawa. On March 4, 2025, the government unveiled over $245 million in contributions and low-cost repayable loans aimed at building and repairing 5,364 homes across 5 housing projects in the city. This initiative is part of the broader national housing strategy and focuses on addressing the needs of diverse communities, particularly Ottawa's most vulnerable populations. The announcement took place at 280 Rochester Street, home to a 241-unit seniors building that's part of Ottawa Community Housing's repair portfolio. Significant upgrades are planned for this project, including enhancements to essential systems, safety features, and site improvements to elevate residents' quality of life. Ottawa Community Housing received $13.3 million through the Affordable Housing Fund to facilitate repairs for 3,722 units in their portfolio. In addition to the funding for Ottawa Community Housing, the government announced $110 million in loans through the Apartment Construction Loan Program to support the creation of 244 new rental units in the ZB District Block 204 project. Another $65 million in loans is allocated for the 360 Laurier Avenue West conversion, which will result in 139 new rental units with both affordability and accessibility conditions. Richmond and Island Park will benefit from a $49 million loan, enabling the development of 103 new rental units under similar conditions. A notable $8.58 million contribution through the Federal Lands Initiative is earmarked for the creation of 1,156 new units at 1010 Somerset. These investments collectively aim to end the housing crisis by ensuring that everyone has access to safe and affordable housing. The Honorable Nathaniel Erskine Smith, Minister of Housing, Infrastructure and Communities, emphasized the importance of these projects, stating that they not only help individuals and families in need, but also contribute to the broader economic and social well-being of the entire community. Yasir Naqvi, Member of Parliament for Ottawa Centre, expressed his delight over the federal government's commitment to building and repairing homes in the community, underscoring the priority of safe, affordable, accessible, and supportive homes. Stéphane Giguère, CEO of Ottawa Community Housing, highlighted that these investments are crucial in reducing and preventing homelessness while improving living conditions for tenants. The National Housing Strategy, a 10-plus-year plan with a budget exceeding $115 billion, aims to provide more Canadians with a home. As of September 2024, the federal government committed $57.57 billion to support the creation of over 156,000 units and the repair of over 297,000 units. This strategy prioritizes those in greatest need, including seniors, Indigenous peoples, and those at risk of homelessness. The Affordable Housing Fund and the Apartment Construction Loan Program are key components of this strategy. The fund provides low-interest and forgivable loans for new affordable housing projects, while the loan program offers financing to support rental housing construction across Canada. These programs are crucial in addressing housing needs and fostering a stable supply of affordable rental housing. The Federal Lands Initiative, another significant component, supports the transformation of surplus federal lands for affordable housing. By collaborating with various stakeholders, the government aims to ensure that affordable housing is accessible to all Canadians, particularly those in need. That's it for today's segment on the federal government's investment in Ottawa's housing projects. These initiatives underscore the ongoing efforts to tackle housing challenges and provide Canadians with the opportunity to have a safe and affordable place to call home. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, Their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.